We detected an unusual trade worth $15 million on C3.ai stock, ticker symbol AI, on the last trading day. And so in this video, we will analyze this unusual option activity to find out how this wealthy investor is now trading C3.ai stock. Are they bullish and buying or bearish and selling? Because as we all know, the rich have more access to information, including leaked insider information, to make better financial decisions. No wonder the rich get richer. So without further ado, let's dive into the data as usual. As we can see here on the options time and sales tape, 29,565 contracts were being traded at the same time in the last hour of the market at 3:13 p.m. at the 38-second mark on January 7th. And so very unusual to be trading in the last hour. But we have to dive into this data to find out what exactly is this wealthy investor doing, because they are trading the 40 strike call and also the 35 strike calls for different dates, the January 17 options and the March 21st options. So based on our analysis of this trade, they were rolling to a lower strike price, which means they closed out of their 40 strike calls and rolled to the 35 strike calls. That's a lower strike price. This is a roll down in options, which means they were actually at a loss. So this is a higher risk trade, even though this is a $15 million trade. Now, how do we know that this is a $15 million trade? Well, if we multiply out the number of contracts by the price that they paid here, $515, we can see here that $515 for each of these call options multiplied by the number of contracts, 29,565, is a total of $15.2 million. But because they rolled down these strike prices, where you can see that they were originally in this 40 strike calls, they had to close out for $33, taking a loss because the stock is not at that $40 share price. It is at $35. And so they rolled down, taking that loss, but they are doubling down and continuing to stay bullish on C3.ai. So keep that in mind. This is a higher risk trade in comparison to the trades that we share on our website, because this is following a wealthy trader that has been at a loss. So keep that in mind. Not all of these wealthy traders are always profitable, and that is why following unusual option activity requires deeper data analysis in order to follow the higher probability of profit trades. If you want access to the higher chance of profit trades, then make sure to go to our website. We'll put a link at the top here where you can gain access to better trade ideas. Now, C3.ai was actually one of our trades back on October 7th, on this day, when the stock was trading at about $24. And we shared it with our members. And we took profits on November 19th, managed our trade, and then we continued to manage it as it went higher on December 6th. And so as an example, you can see that these were the videos that we shared with our members only. On October 7th, when we entered our trade to go long bullish on C3.ai, you can see that the analysis of our trade here was this trade. It was a positive delta trade, a long synthetic strategy that we had analyzed, and that is why we went long bullish on October 7th when the stock was trading at about $24 a share. And you can see that we updated our members here on November 19th when we managed our trade when the stock went to $31.91. That is when we started taking profits, readjusting our strategy. You can see at that point, we had already made 173% profit based on our option strategy. And then we continued to manage our trade. We can see here on December 6th, when the stock hit the $40 share price, we locked in profits of 224% profit. So even though C3.ai did hit $40 a share, this wealthy investor did not manage the trade. And that is why it's very important to manage the risk on our trades. And that is what we do by sharing our trades on our website to our members only. So go to our website if you want access to better trade strategies and when to manage trades. Now, for this trade, you may be wondering, how did we know that they were closing out of their 40 strike calls and rolling down to the 35 strike calls? And how did we use this data to set up our option strategy to reduce our risk while increasing our chance of profit? Well, let's dive in. You can see here that for the option chain, the new data has updated, and these March 21st options for these 35 strike calls, the open interest has now increased. So we know they were opening those 35 strike calls. 31,000 contracts are now opened. And so those were the new trades where they were buying these 35 strike calls for 515 each, as we had calculated earlier. And we can see here on the risk profile profit loss graph where the share price is represented on the x-axis and the profit loss is on the y-axis. Note the zero break even. And so when the lines are below it, it is a negative loss. And so as the share price goes down, it is a loss, more negative. If it goes up, it becomes more positive gain because this is a long bullish trade. But it is higher risk because when we take a look at the Greeks here, we have a negative theta trade. And so these options will decay in value as time goes on. The break even you can see is all the way actually over here at the $40 share price where the zero meets with that blue line, which is the expiration line. And so the stock has to trade above that $40 share price in order to be profitable at expiration. But if it rallies sooner, it could become profitable right away. That is the purple line. And so the way we reduced our risk, especially with the theta decay, is setting up a different option strategy. And so our strategy is over here. You can see our position for the March 21st options. Right over here, POS stands for position. Red means sell at the 45 strike calls. We sold these options. And for the April 17 options, you can see our position here at the 40 strike calls. POS is green, which means we bought these. And so our option strategy is over here. And so when we analyze this trade, you can see this is a diagonal strategy. It only costs $174 of debit each, so much less than the unusual options at $515 each. And our strategy has less risk because you can see for our theta, we actually have a positive theta of 0.27. So time will not decay in value on our trade. We are also still going long bullish, and that is why we have a positive delta trade. And our break even, you can see over here, is less than 40 right here, where it meets the zero line at expiration. You can see that is about $36.74. So the stock does not have to go all the way up to $40 a share like the unusual options in order to be profitable. It only has to reach $36.74 by expiration for this trade to be profitable because we've reduced our risk with this type of option strategy. So keep that in mind. There are option strategies to reduce our risk in order to increase our chance of profit. We do not simply follow these unusual options because they are higher risk. If you want to gain access to more of these better trading strategies, then make sure to go to our website. We'll put a link at the top here. Let us know in the comments below, what do you think will happen to C3.ai from here? Will it go up or will it crash back down? As usual, please smash the like button, subscribe if you haven't. Take care and have a wonderful day.